Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Schwab and delighted to be getting to spend this time with you. Today, we are all going to pick up and wave our little flags and talk flags, my friends. So we're going to talk bull flags. We're going to talk bear flags. We're going to talk about what a flag is if you're new to all of this and you're not familiar with flags. But we used to have an entire class taught by the Ben Watson that was dedicated strictly to trading flags. And so I thought that it would be an appropriate topic to dedicate a class to it here in our Getting Started with Technical Analysis to the world of flags. So that's what we're talking about today. We're going to go back and look at a couple of the trades that we placed over the last couple of weeks on diagonal resistance breakouts and panic breakout patterns. We're going to look at how those are doing. And so we got a lot to stuff into our 45-minute bag. If you are not following Ben and I in the land of X, we invite you to do so. So consider this your formal invitation. Barb Armstrong CS is my handle. Ben's is Ben Watson CS. Ben is riding shotgun with us in the chat today. He knows a ton about flags. As I said, he used to teach the class on trading flag patterns. So if you've got any questions, don't hesitate to ask. If you are new to this community, don't hesitate to type a greeting into the chat so we can welcome you. We link arms here every Tuesday at 2 o'clock Eastern, and we talk about getting started with technical analysis. So I'm delighted that you're with us. I know that we have a lot of the usual suspects in class with us today. So to Scott and Rajit and Mike and Will and John and Kevin and Randy and the rest of the gang, thank you all for being here. We had Riceberg first one into the chat. So good to see you guys all here and helping bring this class to life. Just before we get into the thick of things, keep in mind that everything we cover here is for information, general information and educational purposes only. None of it is to be construed as a recommendation on the part of Schwab or myself. We use the Thinkorswim paper money platform on the Thinkorswim desktop platform. That's a bit of a mouthful to say, but it is a brilliant place to learn, to make sure that you understand your trading strategy and have a plan in place and know how to trade your plan, that you know the mechanics of how to place a trade and on the Thinkorswim platform, and paper money is a great place for all of that. If we do an options trade, know that options carry a high level of risk and aren't suitable for all investors. Also know that short options can be assigned at any time up until expiration from the time you place the trade in your live account, but that will not happen in paper money. Okay, so that's that. So what our focus today is going to be on one type of flag pattern as far as new trades, as far as new trades are concerned. And then we're going to look back at a couple of others, but today is kind of all about flags. And so we're going to discuss strategies that pertain to flag patterns. Okay, we're going to look at some examples on the charts and then discuss why, you know, a trader or an investor might consider looking at these patterns. So that's what's on the menu for today. And so just before we go out to the charts, and that's our next slide. And by the way, we're kind of revamping this, getting started with technical analysis. I think, you know, I know I'm biased because I'm now teaching it, but it was technical analysis that really blew my hair back in 2011 when I first got introduced to all of this. And I just found it such an empowering concept that we could look at how a stock was moving. And so when we look at flags, what do we mean by that? Well, if we have a stock, and stocks don't tend to, even when they're in an uptrend, they don't tend to just go straight up. They'll go up for several days or sometimes even a couple of weeks, and then they'll pull back for a few days, and then they'll start to go up again, and then they'll pull back, and then they'll start to go up again. And so, you know, this is what we call the pole, the flag pole. And here's our flag. And so and there are many different trading plans. I talked about one in the Thursday class that starts at 4:00 Eastern, the after hours. It's going to be rebranded, but it's the after hours analysis class where we did a very specific trading plan based on a flag pattern. But some might have a trading plan that says, I want to enter when I have a candle pattern configuration that indicates that the pullback may be complete, or when I have a close above the high of the low day, which some in trader speak will call a hold pattern. So when you have a stock that has been going up, and then all of a sudden it has a couple of down days, maybe 2 to 5. So here's our flag pull, here's our flag. And so what some investors or traders might be looking for is for it, if this is our low day right here, for it to go above this. So maybe the first day we get a hammer kind of pattern, and then the next day it moves up, and this would be our hold entry. Now, is this only a bullish trading strategy? I say nay, nay, to quote John Pinette. It's a stock can be falling. And again, they don't tend to fall straight down. They might go down for several days and then rally for a few days and then start to fall again and then try and rally. And so, again, here's our pull. And here's our flag. And then on this side, we're looking for this trend, this downtrend to continue. And so instead of looking for a close above the high of the low day here, we're looking for a close below. It's flipped. A close below the low of the high day. And, when I first started, it took a minute for me to wrap my head around that. So it's like, okay, so if this is my high day, so it's come down, it's been coming down, and then it tries to rally. And then if this is our high day, so here's our high day, this is our low of the high day, we want to see it, we want to see the bleeding to continue. So we're looking for that. Oops, I didn't mean to make it black. We're looking for it to continue this way. Dang it. Okay, there we go. So this day, if it closed below the low of the high day, that would be our entry. Okay? And we're going to look at some of these on the charts. Now, the market overall has been what? And in this introductory class, we're not going to spend a lot of time looking at the charts, but, it's the S&P over the last year up over 20%. If we now come out and look at the charts, the NASDAQ up over 20%. Sorry, let's look at the SPX. Now, this is a 2-year chart. Let's go to a 1-year chart. And if I take this and say show price as a percentage, even with yesterday's, the market having this big pullback, and today, it gapped on the open, it's up, 0.75% so far today. But, it is up 24% in the last year. So in spite of yesterday, and then now let's look at this because we're talking flags today. Might some look at this and say, hey, Barb, if I'm playing I Spy with my little eye, let me shake my Etch a Sketch here. And could we call this a bull flag? We could. And do we have a close above the high of the low day if we wanted to trade this index? Now, Mr. Watson has abandoned his class on trading flag patterns. We've kind of rolled that in to another class, and we now call that trading price patterns. And I now teach that on Wednesdays, but Mr. Watson is now teaching this class on trading indexes like the SPX. And that's at 11 o'clock Eastern on Wednesdays. So if you're interested in saying like, hey, could we trade this and how might we trade it? Go to that class on trading indexes tomorrow at 11 o'clock Eastern. Yeah, now Mr. Watson will not be there. He will be on his way to Seattle. So I don't want to disappoint you unnecessarily, but yeah, that will, this kind of idea may well be a topic in tomorrow's class, especially if it follows through again. And the same thing on the NASDAQ. Okay, so we're not going to spend a lot of time there. So I'm going to start by looking at a couple of stocks that are downtrending that we aren't necessarily going to place example trades on, but I just wanted to show you, what these bear flags might look like. Now, Dollar Tree has unfortunately provided us with an ongoing stream of examples of bear flags, have they not? And, and now, so we're just going to look at this section of the chart, but, it gapped down and then tried to rally. So let me get so it gapped down, right? Tried to rally, bear flag. And then it fell again, tried to rally for a few days, fell again. And then this rally looked like, wow, we just had like 4 up days. And then we had this candle pattern kind of at the top. And then it, continued on down its merry way. Fell again, fell again, tried to rally. Now with earnings, it gapped down. It gapped down prior to earnings and then it kept on falling. And now, and so what is this characterized by? A low, lower lows, lower lows. I mean, this is what characterizes a downtrend, right? But, if we wanted to trade that, we might use, a trading plan that takes advantage of a stock that is falling in a bear flag pattern. Okay. So Dania, this is a getting started class. And we're kind of partway into the rotation, but there's also a getting started class on stock investing that is on Thursdays and taught by Kevin. And you may want to check that one out, but I think you're actually at a good place. Okay. So let's look at another bearish example. So let's look at Nike. So Nike has been on the struggle bus, and we can see, like if we just even come in here, that, it tried to rally and it looked like it might be kind of changing its stripes. And then what happened? It fell and then it tried to rally. So let me bring up my drawing tool. Let me maybe start here. This is a little cleaner. So, we had this, it kind of consolidated for a week or so. It comes up and then it falls, tries to rally, falls again, tries to rally. But we're seeing, and this is kind of a pretty short flag. So here's the pole, here's the flag. Very short pole, a bit longer flag. And then it fell again. And then it came up and it kind of consolidated here and then it fell. And then it tried to rally for a couple of days and then it looked like it was falling again. And now it's kind of turned itself around. So, another series of examples of bear flag type patterns. Now let's come to the other side of the equation and let's look at a couple of bull flag patterns. And so let's start, we'll stick with the letter N. So let's look at Netflix. Now, last week we were talking about pennant patterns or triangle patterns. And this is kind of a, you know, a bullish triangle pattern in that, you know, we have a stock that has certainly been uptrending. But it got to a point where we saw a high and then a lower high. And, you know, even though we were seeing lows and higher lows, it was, you know, last week when we looked at this, it's like, well, it's still trading within this pennant pattern. So we're looking for it to break out one way or the other. And lo and behold, it breaks out on earnings. And might we look at that and say, hey, that looks a lot like what? A bull flag. Yeah. So let me just. And then what have we had? About a 3-day pullback. Now, if we're waiting for a hold, a close above the high of the low day, would we have that? The answer is we do not have that yet. But some might look at this and say, and it's interesting because the pattern has changed since I looked at it an hour ago, gosh darn it. You know, where an hour ago, get rid of this. This was what they call a bullish engulfing pattern. And so if we said, well, if we think that this might be our low day and we're looking for it to close above the high of the low day, or if we're thinking this might be our low day and we want it to go above, let's say it was, you know, after 2 o'clock and our trading day had closed, our high today is 977.73. And so we might say, okay, and I've got to write this down or I'll never remember. 977.73. If we don't want to place this trade unless it goes above the high of the low day. So if we're assuming that's today, we might say, well, this is almost $1,000 stock. So if it goes $2 above that and hits 979.73, then I'd like to buy the stock. And you know, what might a target be? Let's say you have this portfolio, you've inherited some money, and you want to be able to invest it in a way where you're protecting yourself to the downside, but you'd like to be able to, you know, rather than just buy and hold the stock forever, you'd like to buy it, put a target on it and make a little money and then exit. You know, with cash in hand. But if the trade doesn't go according to plan, you don't want to blow up your account. So we started with $500,000 in this account. And our guideline is that if we're buying stock, we don't want to put more than $25,000 into any one position. So we could buy, you know, say 25 shares of stock. But what might our target be? Well, we can have 2 different targets. One would be right here, and that's a swing, what they call a swing target. And so we're saying, I just want to buy it here, and when it gets back up to $9.99, I want to sell it. And so that would be our swing target. Now, we might say, well, that's not very much of a move. And in this case, it isn't. And so we might say, well, I would rather do the flag target. It's like, well, what's a flag target? Well, a flag target is based on the length of the flag pole. And so we come in here and say, okay. Now, one thing you can do is you can say, okay, this is $9.99 is the high. here was our low here at 823.52 and just measure, or you can kind of click and come up, and you're going to get, it may not be exact, but something in the neighborhood. So 174.20. I actually did the math, I think. Maybe that was on Goldman Sachs. I think it was around 175. But yeah, so if we just say, okay, let's make it 170 to be more conservative. So then where do you start? You know, if you take this flag and you duplicate this drawing, and I bring it over here and line it up with the bottom of today's candle, where might that target go to? Well, it would go to around $1,120. And one of the things you may want to do is come and look at the live news and say, well, hey, it beat on earnings. Are the analysts raising price targets? So Wolf announced an $1,100 price target. New research raised their price target from $785 to $900. Well, you missed the boat there. It's already trading, above that. Bernstein raised their price target to $1,200 from $975. And the thing that you might be looking for is like, are they raising price targets or lowering it? Because all these guys can't be right, because their price targets are often not the same. Although you have Daiwa here, 1,050 from 833, Citi to 1,000 from 750. And so if we just put this target in, if it goes up and doesn't quite make it, can we choose to sell our position? Absolutely. And so here we need some more room at the top of our chart. So if we wanted to add more room, we're going to come to our price axis and say, we want this to be 20% to the upside. And now we can see that second target. And this is, our flagpole target. And we said we'd make that, 1120. So we can change that to 1120. And this is our flag target. And that's how we measure it. And so if you wanted to put that in, then the next question is, well, I don't want to risk, and technically speaking, if I don't put in a stop, is it likely that Netflix goes to zero? No, but that's how much risk we're taking if we don't put in something to protect ourselves to the downside. So we might say, well, hey, it gapped up on earnings. And we're going to talk about candlesticks in another week. But if we look at the bottom of this big candle, and that was 950.76, what if we put a stop 3% below that? And so if we said, okay, that would be at 922.23. So our stop would be down around here. If you want it. And once we put these in the system, you don't have to draw them on your chart. You can come in and just say over here, show orders, and it will show the orders. The reason I often don't do this is because I teach every single day of the week, and I often will have multiple trades on a single stock. So then it almost becomes a little bit overwhelming. So we're going to come in here and place this trade. We're going to buy some shares of stock, okay? And we want to buy when? We want to buy if and only if it goes above 979.73, above today's high by $2. So I'm going to hit the trade tab. I'm going to come anywhere on this line and right click, and I want to buy custom with an OCO bracket. Now, do I want to enter my trade right now? I do not. I can make this something called a buy stop, but the way my brain works, I find it easier if I make this a market order that's good till canceled. And then I'm going to hit this little sprocket that will bring up my conditional order, and it's saying, I want to buy Netflix if and only if it goes above 979.73. And you might say, why would you want to pay more? Well, because if it keeps pulling back, I don't want to buy at all. And so this could prevent me from making a trade that would have turned out to be a losing trade. Now, if tomorrow the stock does pull back, I may want to replace this and put in a new entry. So is this a set it and forget it? No, it's not. Now, did I want to buy 100 shares? No. Why not? Well, because that's a $90,000 position. That would be 20% of my account size. And I don't want any one position to be more than 5%. It's a way of, you know, from an investor's perspective, not having all my eggs in one basket. So I'm going to change that little firecracker into a paper clip. And when I hit enter, then my target and exit reflect the same quantity. And then I'm going to come in here and put in my target. So, and what's my target? 1120 in this example trade. Good till canceled. Good till canceled. And my stop is going to be at 922.23. So how much are we risking? Well, if we round this up to 970, and let me come out here and we'll change this to a calculator. So if I'm paying, let's just make it easier for me to type in at about 970, and my stop is going to be at 922, we're risking about $48 a share times 25 shares. So we're risking about $1,200. Now, there's no guarantee that we get out at exactly that 922.23, but this is, even in spite of the fact that it's almost $1,000 stock, it's traded over 2 million shares today. If it gapped down, we could get out for something appreciably less, but risking half of 1%, we could risk up to $2,500 on a trade, and we're only risking $1,200. I say only because we don't really want to lose anything, but you know, it won't blow up our account if we get stopped out. Oh, okay. So that is in, we're not hearing that little ping of it filling because it hasn't met our condition of going above that 979. Okay. Now, would you guys like to look at another example? Okay, let's look at Goldman Sachs. Now, Goldman Sachs, you know, it's also been uptrending, you know, and this is just a 6-month chart. We've seen it go from 437 to 645. If we step back and look at the last year, it's gone from 374 to 645. So that's a pretty dramatic, you know, that's a pretty dramatic gain in a year's time. And then if we look at this, we see again this consolidating pattern, and then it gapped up again on earnings. And financials have been one of the strongest sectors. In fact, it's been on the podium in the top 3 in both the last 4 weeks and in, if we come and we look at S&P 500, the sector indices, and also the last 3 months. So when we look at which have been the strongest sectors, financials is in 3rd place over the last 3 months, and it's kept its 3rd place ranking, you know. So this is a strong stock in a strong sector. Oops. And then, so if we come back here and we zone in after stepping back to look at the longer term trend, do you see what I see? Yeah. Do you see a bull flag? You know, where it came back within this pennant pattern. We were looking for it to break out, and it did happen here. That, you know, we could have traded this as a diagonal resistance breakout or a breakout of a consolidation pattern, but it came up and then it pulled back for a couple of days. And you might say, hey, how come these candles are white, not red? Well, they have a red outline, but what the red outline means is that it opened down here and then rallied through the day and closed up here. So here was the open, here was the close. But it still closed above yesterday's, the day before's high. And then yesterday, the same thing happened. It gapped down on the open, rallied throughout the day. So this outline, I guess I should have drawn it in red instead. You know, it rallied throughout the day. And in fact, at one point, you know, was probably, this was a green candle. And then but it still closed below the low of the day before, but below the close of the day before. Like where this one here, it opened here and then it just kept on falling. So this one went like this. These two, you know, they opened lower and moved higher. But today, do we have that close above the high of the low day? Well, if it were to close right now, you know, I'm going to have to erase that. I think the answer would be yes. And we can check that if we want to get really specific by looking at yesterday's candle, saying, well, the high of yesterday was 635.71. And we're $1 above that. We're at 636, you know, so we have an entry. And again, could we do this bull flag idea? And the answer is yes, we could. And so again, now this wasn't a very deep pullback. So, but could we make our target, this swing target, this 645-ish target? Yes. Or what's the other choice? Well, we could say, well, we're going to go from the bottom here of our flagpole up to the top. How big is that? It's about $89. And then we can just duplicate that drawing and bring it over and put it here. And where does that take us to? Well, I measured that out. It takes us to 704. So like that's off our chart. You know, but could we make it? Because 700 could be a pretty big clip level. We're at 636. Could we make it like 689? We could. You know, we don't have to get the entire flag. So we could say, well, we're going to make this our flag target here. We don't have to go the whole way. We could say we're going to make this 689. Or you could make it, I mean, you could make it 704, which is technically, you know, what that line might be. But if you said, well, if I get in now, you know, how much, if it hit the target, if it hit 689, how much might I make? 689, and you don't want to count your chickens before they hatch because they may never hatch. And if I said, okay, we're getting in at 636, it's about $53 a share. Now, how many shares can we buy? Well, that's another question. And also, how much could we lose if you're figuring out how much you could gain? Well, if you say we're expecting this pullback, this to be a new support level. So where's our low on that day? 624.46. So we're going to multiply that 624.46 times 0.97. So our stop would be at 624.46 times 0.97. So how much are we risking? About $30 a share, $31 a share, for the chance to make appreciably more than that, right? Okay, so we're going to take our 25,000. That's the biggest position size we want. We're going to divide that by $637 just to make it a round number. So we could buy 39 shares. Let's make it 40 just to make it a rounder number. So we're going to come in here and we are going to buy custom with an OCO bracket. We are going to buy 40 shares. We're going to we've got our little paper clip in place. So we hit enter anywhere and it lines those quantities up. We're going to make our exits good till canceled. Our stop, I've got to do that again, 624.46 times 0.97. So that's 605.72. Okay, and our target is 689. Now, if you want, you can make it 699. You know, technically 704. We're going a little bit shy of that. So $689. And when we come to confirm and send, we're going to put this in our stocks with targets, and we're going to say that this is a flag target. So that if we're going back and going, why did we pick 689? We'll know that it was based on the flag. I'm just looking, are there questions? So I'm using, somebody's asking if I'm using hollow candles. I'm using candle trend. So if you come to the charts and if you want to see, so now we see, you know, these orders on our chart. And if you find that distracting, okay, so why is that stop? That stop should be below here. I may go in and adjust that. 624.46. What is this stop at? Let's come and look. Goldman Sachs. Oh, it didn't put my stop in here. It has the stop at 635. So we want to cancel and replace that. So our stop, we want to be at, I don't know how I missed that, 605.72. 572. Okay. It's a nice thing about having it on the charts because that's 3% below the low of this day, which is where we wanted it. And then there's our target. So let's quickly look at the other two positions that we put on over the last couple of weeks. And this Netflix, once it fills, we can then just move this up into our stocks with targets. But with Amazon, we bought shares of Amazon on the 21st, so in last week's class, and we had a target based on the diagonal resistance. Now this has not been customized. The only thing I added was net liquidating value, but days pertains to options, so we don't need that. So we're going to come in here and we're going to kick that out. But what we would like to know is what our profit and loss percentage is. Like how much have we gained relative to what we've invested? So this will say we're up, 3.75%. So if we come and we look at the chart, how close is it to our target? Good question. Oh, this is the one we just put on. Oh. No, well, here we are. So we put Amazon on back on the 21st. Our target is 252. And our stop is here below this support level, this because it was a diagonal resistance breakout. So we're just going to let that continue to percolate. But we may say, hey, stocks can gap up or down on earnings. So next Tuesday when we meet, we may decide to close out this trade. Because if we're saving money and we want to be able to do something with it, these are unrealized gains. And what the market giveth, the market can certainly taketh away, right? Now, the other trade we put on was on Chewy. And you can see we're up 6% on Chewy. We did a half a position size. and we're up $723. But you can see, we were up over 800 when, the bell rang this morning. So let's look at Chewy. So with Chewy, here's our target. Here's when we place the trade. And here's, it looks like it's gone up after going sideways for about a week after we placed the trade. And then it's pulled back. Like, could this be a little bull flag? Not sure. So we may want to just watch that carefully, because just because we have a target doesn't mean it's going to meet it. So that's where we are on those two trades. Now, what if you're saying, like, Barb, I really like this flag idea, but I have a small account and I don't want to risk over $1,000 on a trade. In fact, I don't want to risk like more than, $500 or $600. And so, like, could we look at, and here's another example, American Express, where we have a bull flag setting up. And we may look at this again tomorrow in our trading price patterns. It's pulled back, but it hasn't broken out yet. But with Goldman Sachs, could you say, well, could I use an option trade to be able to participate in what I think will be an uptrend without having to invest so much money? And so the answer to that is yes. Could we come out to the trade tab and say, look at February? And if you're not familiar with a long call vertical strategy, there is a Getting Started with Options series where you can look that up. And there's an example trading plan in the Trade Management mini session series that you can watch also. But could we buy, say, it's trading at 636. So when I looked at this earlier, it was at 634. Could we come in here and buy a vertical at 630 and maybe 640? So we're expecting it to continue to go up. We'd pay $5.60, so $560. How much could we lose? We could lose $560. How much could we make? We could make $435. So that's not quite doubling our money. Now, in our example trading plan in that Trade Management mini session, we could say, well, what if we could make 50% of this 565? So what if I said 565 times 1.5? What if we put a target in here and said, when this becomes worth about 850, I'll exit the trade. So that's what we're going to do. We're going to put this in our, if I have a long call vertical bucket, bucket, and then we can compare this. Oh, you know what? I'm going to edit this to put our exit in. So we're going to make this, our exit is going to be at 847, which is about 50% higher. We're live in the market. Make that good till canceled, confirm and send, long call vertical. And then we're going to compare this to our stock trade. Our stock with target trade. Okay. And so here's an example of looking at bull flags and whether you have a large account with lots of cash to invest or a smaller account where you want to risk substantially less. There are ways we can look at these trading patterns like diagonal breakouts, pennant patterns, and flag patterns and trade them. We didn't set a stop loss, Alexis, and I'm going to refer you to the example trading plan. And if you come to that, oops, sorry. Let me just bring this up. So just as we wrap up, the example trading plan will suggest, and this is just an example, you can do it however you like, that you get out when you're either up 50% or down 50%. and define that. And I walk through the reason why we don't do that as an OCO order like we did the stock trade. But if you come to playlists and scroll down to the mini sessions, and you'll want to subscribe to this channel. I'm going to ask you to hit like if you found this helpful. Where are my mini sessions? Here we go. So here's an example trading plan for that long call vertical. So you can check that out. Also, if you're new to Thinkorswim, there's a whole group here. And I was asked yesterday about how do you customize the monitor tab? There you go, right there, 11 minutes. So guys, that's a wrap for today. Thanks to Mr. Watson for being with us. Thanks to all of you for showing up. Please hit the like button. It helps move things up in the algorithms. Don't forget to follow Ben and I in the land of X, Ben Watson CS, Barb Armstrong CS, and subscribe to the channel. There's another great webcast coming up right after this one, so stay tuned. Hope you have an awesome day. We'll see you all tomorrow. Bye for now.